Today's podcast episode is going to be spicy, and I promise that, especially if you are a mortgage loan originator, or heck, you may be a producing manager who receives an override. But we're going to dedicate an entire podcast episode to override managers. Are they earning and deserving the override they receive? And how bad is it impacting the originators who they work for? Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Dio, what's poppin'?
I hope you're geared up for some spiciness, as I called it earlier.
Yeah, what was that, Dustin? What's that spiciness all about?
We're going to talk about some topics that can get heated, some topics that can be slightly controversial.
Okay.
And my goal is to piss off everybody
hell
while
yeah.
at the same time,
period, right there. Piss off
everybody like us.
Stop.
Yes. I think that's going to
What are
be
we
my
talking
gift to this episode.
What is this episode about? Loan officer semantics and the hierarchy of working in the loan officer industry?
No, it's about certain loan originators feeling as if they have a manager who does nothing but just suck from them.
That's what managers,
like a vampire.
That's what all managers do, Dustin.
No, not all managers.
So I'll wait. That's what a manager's role is.
Okay, but in the realm that I'm talking about it, in real estate, mortgage, financial advisory, and sales in general, you tend to put sales leaders or sometimes sales managers in place where their compensation comes from the production of others.
Yeah, so I need you making money so I make money, so make more money so I can make more money.
Yes. Yep.
Sounds like a pimp to me, but okay.
Okay. Yep. Some people have called it, sounds like a multi-level marketing scheme.
It does. Sounds like a cut knives.
Okay. So we're going to talk about this. Like, we are going to do a deep dive. I'm not saying it doesn't happen. And I'm not saying that loan originators shouldn't be a little bit suspect of a manager who is ripping. This is a term people use in this industry, and I freaking hate it.
Okay.
Oh, yeah, I'm going to get a rip off of so-and-so. No, you don't. No, you can earn an override, but we don't take overrides. We earn them. But we're going to talk about this. And we're going to give the managers a heads up that, hey, look, your LOs, if you don't know this already, are talking behind your back. And they feel like you may be an override manager, somebody who you don't really lead, you don't really bring value, but you're quick to take money off the top to pad your pocketbook. But I'm also going to talk to loan originators that I promise you, in most cases, not all, but in most cases, they don't want the alternative. I have plenty of friends who thought the way that they felt. They went out on their own and they came right back because they realized quickly, there are certain things that were being done that, well, they didn't recognize how much work that was, or how time consuming it was, or how distracting it was, or how much value it brought them until they missed it. And I do believe there is a happy medium, that I do believe managers are in partnership with their originators, and originators are in partnership with their managers, and collectively they're in partnership with their corporate team as well. I think that's going to be the theme of today's episode.
Well said.
Yeah. But normally, I like to waste time talking about things that aren't mortgage related.
I knew something was off, but it felt great. I mean, hopping right into it.
Didn't it?
I mean, yeah. What, are you going to go backtrack now and talk about some shit that nobody cares? They're already, what do you call it, spiced up for the episode. Now
They are spiced up.
No, what, are you going to go back and tell them some shitty story they didn't ask to hear? But go ahead.
Nope, I want to give 2 shouts out.
2 shouts out, okay.
2 shouts out. That's how it's said. 2 shouts out. Yeah, they're not shout outs. They're shouts out, right? They are sisters-in-law, not sister-in-laws. You get that?
I do.
All right, Grammarly. You should check it up. Check it up.
Yeah, well, yeah.
You should look it up.
Yeah, good job,
You
Grammarly.
should look it up. You should check into it, or you can look it up.
Well said.
But you can't do both.
Okay, so who the shout-outs for, Dustin?
All right, so I have 2. I have the Louisiana Mortgage Bankers Association.
Baton Rouge.
Yes, so their annual conference is in August. So August of 2025, it's next month. Yours truly, I'll be there giving a keynote one of the mornings. I'm going to be moderating a panel. It is in Baton Rouge, Louisiana. It's at one of the casinos. 100% if you are a mortgage professional in or around the Louisiana market. This is an event you won't want to miss. Plus, I'd love to hang out with you and maybe even throw some dice with you at the craps table.
Shooting craps. Speaking
of Mortgage Bankers Association, because you know how much we love to support our trade.
NBA.
Yes, our trade organizations. The Wisconsin Mortgage Bankers Association. Now, their event's not till November. November 13th, to be specific. It is in Pewaukee, which is right outside of Milwaukee. But this is really cool, John.
Okay.
So my wife and I are trying to do this thing where we're trying to hit all 50 states before we turn 50. So we're both 46. This is even crazier. We're both 46. Yesterday, we celebrated our 23rd wedding anniversary.
Go Jordan.
Which is what I said too, by the way, go Jordan. But it made us realize we've been married half our lives.
Yeah.
That's kind of crazy, right?
That's a long
ass time. That is a long ass time. You two will get there. You're just about 10 years behind.
Yeah. I'm catching up behind you.
Yeah. But so she's never been to Wisconsin. Now, because I worked at Waterstone for 15 years and they're headquartered out of there. Yeah, I've been up there 20 times in my life, but my wife hasn't. So with me having the opportunity to speak at the Wisconsin Mortgage Bankers Association on the 13th of November, then we looked at the Packers schedule.
Go Packers. The
Packers play the Eagles Monday Night Football on November 10th.
Oh, that's going to be hella cheap.
Yeah. Hey, thank God I know a guy who knows a guy who has a wife who has tickets and has already offered them to me.
Shit.
Has already offered them to me at face value.
Wow.
But Michelle and I are going to go to the Packers game on November 10th. And then I'll stay in Milwaukee so then I can speak at the Wisconsin Mortgage Bankers Association on November 13th. All right. So anyhow.
Okay, let's talk about this because I have questions about how this works, this Cutco knife hierarchy. So I'm a loan officer and I just got licensed, right? And then I have to go work for like a company that has like 4 walls and like a phone line and a fax machine so I can like get into Encompass, right? So I got my email. You're telling me I have to have like the manager that I like report to like skims money off my paycheck?
Okay, it's not skimming money off your paycheck, but yes, in general, sales managers, branch managers, regional managers, divisional managers, account executives, right? There's X amount of dollars being generated on every loan that funds. And those dollars that are originated, right? Those dollars that are that revenue that is created goes to pay the overhead. Now, the overhead could be the 4 walls that you talked about. It could be the phone line and the fax machine that you talked about. That's overhead. Your processor, your underwriter, the compliance department, the legal department, the marketing department, the IT department, your health benefits, your payroll taxes, like that in itself is overhead. Now, most of us want some form of a manager and sometimes some form of a leader. And I coach that managers and leaders aren't always the same people. Now, they can be the same people, but they're not always the same people. And I do believe that the hardest job in the mortgage industry, and I've worn many hats and I've fulfilled multiple roles, a producing branch manager that is at the top of their game, the best of the best, is one of the hardest roles because you're asking these people to be great producers, great managers, great leaders, and great recruiters. That's 4 things that you're asking somebody to be. Most of us can be 2. I can be a great originator and a great leader. I can be a great originator and a great recruiter. I can be a great leader and a great manager, but I suck at recruiting and I'm not that good at originating. It is very difficult and rare that you will find someone that does all 4 well. But when you're a loan officer, you should expect and anticipate some level of support. Right now, I'm not saying that you don't need all of the support that is offered and that there aren't companies that overkill it, whether it's in the marketing department or whether it's with management. But yes, to answer your question, John, there are men and women who are paid to support the sales teams, and their pay is typically what we call an override, which is basically a variable compensation that says if your 5 LOs are successful this month, you'll make more money than if they were less successful, right? Because it's a certain basis point based on their production. And the companies that employ the managers, that employ the loan officers, they have a formula that they're following. And by the way, most of us, again, we desire some form of a manager and some form of a leader. But there has been a lot of commotion,
scuttlebutt
going on in the industry where people are like, well, I don't want to work for that person. They're just an override manager. And I want to unpack that.
Does every like LO have a manager? Are there some instances, like if I worked in a call center, do I have a manager? Like every LO?
Everyone has a manager until you run your own company. Everybody has someone they report to. Now, the debate is, well, there's too many hands in the cookie jar. And I want to unpack that. Like, what do you really mean by that? Because I'm not 100% disagreeing with some people, but some people, especially those on LinkedIn, are so hardcore convicted with their train of thought. It's as if no other train of thought is allowed in, and there's only one way to do things.
Well, that's because their manager just comes in whenever he or she wants, sits at their desk, plays snood or solitaire all day, kicks their feet up, doesn't really do anything, then immediately takes a lunch, is never present, sometimes answers my calls, but then when I really need them, doesn't do anything, throws like a monthly branch party where he or she orders pizza and then really does nothing for me, but then I want to look at my paycheck. I'm seeing half of it missing because they're taking money from me, so therefore they offer me no value. So what are they doing?
That is the thought of some. That is by far the thought of some. And by the way, that's the action of some. There are plenty that probably do that. That's why we are going to talk to both the producing managers, the non-producing managers, and even those that just produce and they don't manage, because there's perspective that needs to be had on all sides. And I believe all parties can do better. All parties can do better. And that's what I want. I don't buy into the fact that a non-producing manager is nothing but a drag on pricing or a drag on the originator's ability to generate income. I don't. That said, I'm sure there are some that aren't earning their keep, right? They're showing up, they're expecting to get a paycheck. And it's like, well, when you're in sales, you get paid for what you've done lately. So it's like, what have you done lately for your people? Now, could we do away with non-producers? I don't think so. Could we eliminate some non-producers? I do believe we could. But I come from a school of not even thought, it's a school of experience, where some of the best leaders and the best managers don't produce loans. And if they did produce loans, those managers and those leaders would be way less effective as managers and leaders because their sole focus is on their personal production.
Yeah.
So they're putting themselves first, everyone else second. You can't be a good manager or a good leader when you're not putting others first.
Yeah, I mean, that seems common sense. Like, you're going to spread yourself thin if you have a team of LOs reporting to you that depend on you and you're just like hustling loans yourself. It's going to be difficult to give everyone your time.
Correct. And better yet, when you're doing business development, you're doing business development for yourself, not for them. Right? When you're making sales calls, you're making sales calls for yourself, not with them. When you're looking at pipeline management, you have your own pipeline that's keeping you up at night. Then, oh crap, you have theirs as well.
That's like a player coach. That seems like a conflict of interest.
Look, there's a double-edged sword when we're talking about producing managers, which let's spend some time on this. This isn't quite, I mean, it parlays into overrides because managers receive overrides in most setups. But let's just talk about the player coach in general. Let's do pros and cons. I love working for a manager who also produces because I know they're in the trenches. I know they feel my pain. Okay, that's a positive. I love working for a producing branch manager because that branch manager is leading by example. Do as I do, not do as I say. Awesome. I despise working for a producing manager because they're never there for me because they're always out on their own sales call. They're never there for me because they're always meeting with a borrower. They're never there for me because they are doing stuff that benefits their business. Because at the end of the day, these producing managers, by the way, best case are probably making 25 basis points. I highly doubt it in today's market. Highly, highly doubt it. And that's net, not gross. That's what that's the income that they're deriving from the LOs that they lead. Worst case, they're probably making 5, or hell, in some markets, 0, because their branch isn't profitable. And at the end of the day, an override is nothing more than a piece of the profit that they are being able to have shared with them. So when you're looking at a producing branch manager, why wouldn't they want to go focus on their own production first? Because that's where they make the most money. That's where they have the most control. Most of us don't have equity in our companies. We don't have stock options. We're not getting profit share. So our personal production is all we have. But if I'm a loan officer, I'm a top producer, do I really want to work somewhere where that guy or girl is actually competing against me and putting themselves first and me second? And there's no right or wrong. That's what I love about this particular question. Some will, some won't. Who cares? Move on. There will be plenty that don't want to be competing against their manager. And then there will be plenty that are like, I would only work for a manager who's in the trenches. So cool. There's no right or wrong. I think each of us has to find our own way. Now, if you are a producing manager, you got to ask yourself, there's 4 things you need to be doing. Production's one of them. Recruiting's one of them. Management's one of them. And leadership is one of them. So I just completed a 16-week boot camp with 5 producing managers. The whole entire theme of this 16-week boot camp that we call Branch Manager Boost was coaching them through how to be effective in all 4 categories: personal production, recruiting, management, and leadership. And to let you in on a little secret, we don't talk about how each individual can be effective in all 4. We talk about how their branch can be effective in all 4, because I firmly believe, because I lived this for 2 decades, you can only be effective, like high level, I'm the best of the best, I'm a badass at 2.
What do you think most producing or managers in that position, out of those 4 characteristics, what do you think they struggle with the most?
Recruiting?
I'm just asking, out of the recruiting?
Yep, recruiting and leadership. Recruiting and leadership. I think they manage out of default. They have to. Like, somebody has to make sure that the branch stays open. Somebody has to make sure the pipeline is closing in an effective manner.
Like, does anybody want to become a producing branch manager, or are they like there through attrition? Like, they just become knighted. So like, hey, now you're the guy because Jerry left. So it looks like you're the guy. And you're like, oh shit, I didn't want this.
No, you know what they want? What? More money. Our industry, the mortgage industry, and by the way, real estate does the same exact thing. I know financial advisory does the same exact thing. So it's pretty consistent, and it's definitely not relegated to the mortgage industry. We tend to look at our top producers and we make them managers. We make them leaders. They may have terrible communication skills. They may be totally disorganized. They're a hot mess, and all of their information is up in their head. Right? They have no SOPs. They have no playbooks. They don't know how to train, onboard, or lead. But they did a great job of figuring out how to produce at a high level, and they wanted more money. The way to more money, they were told, was by becoming a manager. But becoming a manager came with responsibilities. They forgot about the responsibility aspect.
Oh, shit. Forgot about that part.
Yeah, they heard override, and they jumped at it. Oh, I can make an extra 10 basis points? Like, okay, yeah, but no, you don't just get it. You got to earn it. And that's where you have plenty of loan officers, and rightfully so, LOs. Plenty of LOs, rightfully so, are like, I just work for an override manager. So an override manager is somebody who hasn't earned the money that they get. So cool. That happens. Why does that happen? It tends to happen most, I believe, with producing managers and not non-producing managers. I find that non-producing managers, the ones that I know at least, are actually way better managers and way better leaders than the producing. However, you will get some that look at them and say, what does he or she do for me? All they do is take. I don't believe that's always true. I don't believe that's always fair. I think that's a very ignorant statement coming from somebody who just doesn't know. It's as ignorant as me saying, after 23 years of marriage, I don't know what my wife does all day. She must just sit around eating bonbons and watching soaps.
Well, she thinks you just sit around and podcast all day, so just flip the script.
No, but at least she gets to see a paycheck coming in.
Right.
She gets to look at a paycheck coming in, investment statements coming in, so she knows there's something being accomplished, at least monetary.
Right.
But I could easily sit back and say that, like so many single household income families have, and it's so disrespectful to the other spouse. Yeah. Like, whoa. She's like, all right, homeboy, let me walk you through this.
Oh, yeah, you want to switch, play wife swap? Yeah, let's switch roles real quick, see how quick. Yeah.
Correct. How many times have you taken the dog to the vet? How many times have you had to take off of work to be there when the AC mechanic came to fix the AC?
He's like, whoa, we have a dog?
Yeah, correct. How many times have you taken the kids to their pediatrician appointment? How many times have you gone to the midday school function? How many times have you paid a bill? How many times have you cleaned the house, done the laundry, run to the grocery store? Right? How many times?
How many times have you kept the family functioning? How many times?
Yes.
Yeah.
0. Zero's the answer.
Yeah.
But there are plenty of people that I don't know. Like, man, all I know is she doesn't work and I work all day. And she's like, I don't work? Okay. So I use that analogy when I'm talking to LOs. I'm like, look, I'm not saying that you don't have a manager who could use improvement. I'm not saying that your setup is one in which you shouldn't sit down and have a tough conversation. What I'm saying is until you've done their job, until you've worked in an environment where you didn't have them, you really don't know. You really don't know how much they are doing. And if they're any good at being managers, it looks like they're doing nothing, right? If they're any good, there are no issues. At which point you just think, oh, this is how things operate. No, there is someone behind the scenes making that happen. So I'll give you an example. Recently I had a loan originator say to me, well, I like my managers, but honestly, what they really do is they answer my Encompass questions and they help me do some deal structuring. All right, cool. If that's all his managers are doing for him, then he at least knows that's the value they bring. And I'm not saying that whatever his managers are earning is in line with that value. I'm not saying he shouldn't sit down and have a conversation where he's like, hey, I know this is the value you bring me, but I don't feel like whatever they're earning is worth it. Okay. Now I'm a big believer. Like, why do you care what someone else is earning? If you're closing loans, if you're making money, right? If you're supported, if you're happy in your career, why do you really care what your company is making, what your regional is making, what your branch is making?
Because that helps me be distracted. Instead of making one more sales phone call, I can blame my override manager as to why I'm not making the money I deserve, damn it.
I mean, look, for some people, it's about, oh, well, that's an extra $20,000 I left on the table, right? If you're a $20 million producer and it was 10 basis points that your manager was earning, you may want that extra 20 grand, okay? Okay, cool. At least be able to verbalize. But why does it bother you? Like, I want to work for a profitable mortgage company because a profitable mortgage company should be a company investing in technology, investing in products, investing in marketing. If it's the right company for me. And do I really care how much the owner makes as long as I'm happy with what I make? As long as I'm happy with the lifestyle I'm living?
So what happens to LOs that say, F this, I'm getting out of here. I could do better all by myself. And then they ended up doing stuff by themselves. Yeah.
So that was my point when I was talking about this one originator that I recently was coaching, when I wasn't discounting his beef or his gripes. Okay. No, they were legitimate. And, answering program and product questions is beneficial. And answering Encompass questions is beneficial. Like, those are things I know from firsthand experience could derail me for an entire day. I could lose an entire day's worth of productivity having an Encompass issue. Whereas I went to my manager and he's like, oh my gosh, click here, click there, and boom, bam, it's fixed. Same thing goes with deal structuring. Like calling that AE, calling scenario desk, waiting for my underwriter to call me back, playing around with whatever AI widget I have. Maybe I'm, looped in with Knowledge Coop and I'm using their AI tool. Right? But how much time, how much distraction? More importantly, when I take the time to work on that, how much time does it take me to get back on task? And I may have lost the whole entire day. So there's value there, but to this loan officer, he's asking, but what's that worth to me? Because he would have preferred a manager who is helping him figure out ways to better market himself, who's helping him generate leads, who's creating systems to allow him to convert leads, who is hosting events that he can then invite his realtors to. Like, that excites him more than having someone that he can go to for Encompass or deal structuring. However, he's never not had it. This particular person has never not had someone to reach out to. And I was trying to tell him, like, look, good luck. I'm not saying, again, your complaints aren't valid. You should want more out of your managers, or you should ask, is my current comp and their current comp in line? But the minute he lives without it, so let's talk about when those people leave. I have 2 that I'm personal friends with that have come back. They have gone back to where they came from. So they left somewhere because they felt like they were getting wronged. Mm-hmm. Oh my God, I'm making all this money for my company. All this money. And they're only giving me 115 or 135 basis points. And they make all this money.
Bye, humbug.
I'm out of here.
Bye.
Yep. And they go somewhere that markets and advertise themselves as you can make 275 basis points minus a $600 fee or a $400 fee or a $900 fee, whatever it may be. Mm-hmm. They lasted, both of them. And by the way, one's in the Mountain Time Zone and one's in the Eastern Time Zone. Okay. One's been in their career for 3 years. One's been in their career for 9 years.
Okay.
All right. Both of them were like, F that. F that. They spent less than a year in that new environment because what they realized, for them, it wasn't scalable. For them, they couldn't help enough borrowers. They couldn't help enough realtors. They couldn't close the number of transactions they wanted to. When you're playing the long game, by the way, you want to close the most amount of transactions. That's how you meet the most realtors. That's how you build the biggest, most robust database. So it is a transaction game before it's anything. And although they were making more money per transaction, they weren't making more money overall. And the things that they had to do that their managers used to do for them. And by the way, neither one of these 2 people ever worked at the same company. So think about that. Like we have a pretty decent sample size. It's not for everybody. Your manager, I promise you, does do work. And if your manager's any good, it's work that you don't even see them doing because it's all being done behind the scenes. And I'm not saying it's not work you can't do. Like I do have friends, very successful friends, that they run their own show, right? Like they work at that place where they get $275 minus a $695 fee. And it works just fine for them. But there's not a one size fits all with this. Mm-hmm. And I think that's what's very important for the loan officers to know. When you feel like you have a manager who's nothing more than what you all are calling, like this is the hot phrase in the street. Oh, that person is nothing more than an override manager. I'd slow you down and say, what makes you say that? What makes you think that? And have you envisioned a world where that person didn't exist? And do you feel like you could make more money in that world? And then what makes you think that? Then secondly, have you sat down with your manager to discuss that? Because sometimes it's a partnership that just needs to be reinvented, right? You came into the relationship one way. Things have changed, whether it's a new year, whether it's a new you, whether it's a new them, whatever the case may be. Have you sat down and discussed it? And then second thing, if you are a manager, you're receiving an override. Can you sit down every day, every month, every year and say, I earned that override. I earned it. And then you can list, here's what I did to earn it, and here's what I do to continue to earn it. And part of earning an override for people who already work for you, because earning it by recruiting new people in, that's something your company pays you. But when you're talking about people who already work for you, you got to be a good manager and a good leader, or at least provide them with a good manager or a good leader, at which point most or a portion of your override is actually going towards that extra resource that you've added. And then for the companies, every company is going to have their own business model. Some companies, their business model is lean and mean. Okay, when you work for a company that's lean and mean, you should have lower pricing. You should have a bigger piece of the pie and limited, like very limited support. And there's some people who they're fine with that. And then there's other people like, I can't operate with that. I need support. Okay, cool. Just know support comes with a cost. Support comes with a cost. So when you're going to have underwriters who work weekends, a badass marketing department, a company that provides you with coaching, a company that maybe provides you with opportunities to partner in MSAs or some other type of lead generation activity, that there A, needs people who manage those departments, and B, there's going to come with a cost. And we have to find what works best for us. And I will tell you what always works best for me, and what I will tell every one of my coaching students is just this. We need to find the place in our work environment that allows us to do the things we love to do and the things that we're great at, while working our 40 to 48 hours a week and making the most money we can make per year. I didn't say the most money per transaction. I didn't say the most money per month. I'm saying the most money per year working 40 to 48 hours a week doing the things we love to do and that we're good at doing. Once you find that, then you can probably determine, do you need to run your own shop, have all the revenue dumped in and have limited to no resources? Or do you need to maybe take a deep breath, understand that having a manager, whether they produce or they don't produce, both have their advantages, both have their disadvantages, but you have a manager that you're working with. And that is how you're going to spend your time doing the things you love to do, making the most amount of money that you can make. It's not one size fits all, but there is a big wake up call that we all need to have, whether it's this industry, real estate, financial advisor, life insurance, or anything like it, which is, I promise you, LOs, in a generic most case way, like most times, your manager does way more for you than you know they do. They just do. Accept it and be willing to understand it. And then to the managers, please know that you're probably not doing everything that you can to properly earn that override on a consistent basis. That's daily, weekly, monthly. Look in the mirror, have a long, hard conversation with that man or that woman in the mirror, and find one or two things that you can start doing differently, effectively, immediately, that would allow your loan originators to respect the override that you're earning and to quit thinking that you have your hand in their back pocket.
Hell yeah. Fascinating shit, Dustin.
Yeah. Where did I lose you, John?
I would say about 25 minutes ago.
Okay. So you made it at least a third of the way in.
I think when you gave the shout outs right after that.
Right after that?
Nah, I asked some questions. I was engaged a little bit because it's always fun to poke, the whole management hierarchy thing. So you know what I'm saying.
Yeah, look, it's one of those evil necessities.
Yeah.
It's an evil necessity, but I would tell you from firsthand experience, I would prefer to work in an environment where I was a part of a team.
Yeah.
And that's what I'm looking for, is a team. My manager is either someone who works for me, works with me, or I work for her. Okay, and I'm gonna share this with the group, and maybe we'll find a way to put a bow on it.
I thought that was the bow.
That was a bow, but let me just walk this through for the people really quick.
Oh, okay.
If you are a below average producer, you work for your manager. If you are a good producer, you guys are a team. If you're a top producer, your manager works for you. And managers, I want you to understand that just in reverse. Your top producers are people that you work for. Your good producers, you're in a partnership with them. And yes, your lower producers, you need to manage them up or manage them out and continue being a good leader. But those are the men and women that still report to you, because it's on you to turn them from being below average to good and potentially good into great.
There you go.
Yeah. John Coleman, where are you going to be next? Do you know?
Probably right here, because we got another episode to record.
We do have another episode to record, but I think the next time people see you is going to be in Nashville, Tennessee at Fuse by AIM.
Okay.
Yeah.
What's the hotel?
Gaylord Palms.
Oh, that's acceptable.
Okay. It's acceptable. All right. Jonathan and crew, we look forward to seeing you all out at the Fuse event put on by AIM. That's not until October.
Hell yeah.
That's probably the next time you can see John Coleman, unless, you know what? You may get the invite to go out to Sales Mastery, which is a week before out in Dallas. Yeah, we still got to talk to Don and Gino about that to see if John Coleman can get an invite.
Probably not.
We'll see. We'll see. You know what? If our boy Phil can make sure you get your own Yeti,
that's
maybe
big,
Don
actually.
and Gino can get you that invite out to Sales Mastery. But listen, y'all, if you like this type of content, you haven't done so already, make sure you are sharing it with your friends, your family, your colleagues, your coworkers, etc. If you are a loan originator or a branch manager in need of coaching, you want to come hang out with a bunch of badasses, learn from top producers, men and women like me who are in the trenches still teaching what they did to get to where they are, what they're doing to stay on top. We have an entire coaching platform that is starting to absolutely take off. It's called TLOP's Originator Coaching. You'll find all the information you need on our website, www.tloponline.com. That's tloponline.com. If you love coaching but you can't afford it just yet, no worries. We got free coaching for you. Subscribe to our YouTube channel And make sure you sign up for our newsletter. The newsletter can also be found on the same website, tloponline.com. When you subscribe to our newsletter, our promise to you is we'll invite you to one free masterclass every single month. He's John Coleman. I'm Dustin Owen. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.